please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Right, our market master. By the way, some more of a fall. So give and take everything, it's almost a 2% fall that the Nifty has seen this week. We're not done with the week just yet, but so far the fall has been quite grave. Ashwini Agarwal, the co-founder and partner of Ashmore Investment Management India LLP, joins us now to analyze all of the cues that we've had so far. Ashwini, good morning and thank you so much for joining us. It's been an emerging market problem over the last couple of weeks. You think it could take India down further in the months to come?
So, like you mentioned, it is a sentiment problem which is affecting emerging markets on the whole. It's just the way the currencies have moved, the way some of the concerns have emerged on trade over the past several months, which have culminated into this loss of confidence. Obviously, countries like India, which have a larger current account deficit compared to some of the emerging markets, have seen a sharper fall in the currency compared to a few. But at the same time, it's not as bad as it is in the case of a couple of other markets. So it's a risk off environment in emerging markets. That's clearly the reason why both Indian rupee as well as the Indian markets are getting impacted. And obviously, some issues like a stronger crude oil in India's case in particular doesn't really help. Given our import bill and given the current account deficit. So that's again taking a toll on the sentiment.
Okay. Ashwini, hi, good morning. But do you think the equity market has adequately priced in the risk at 11,500 or is it still elevated considering we'll have our own domestic risks as well this year, for example, the big state elections?
So there are two parts to it. If you roll back the clock to, let's say, November, December 2017, I would have said that the market was across the board quite expensive back then. What's happened in the first half of this year or first 8 months of this year is that quality has continued to rally. It's been a very narrow rally led by high quality expensive stocks which have only gone on to become too expensive. But at the same time, we've seen a significant correction in the mid-cap indices where the index itself is still down about 15% year to date compared to the Nifty or the Sensex, which are in the proximity of all-time highs. So this dichotomy, I think, in my view, does two things. One is that you might continue to see the broad market doing nothing or broad market come off because there is no way to justify the valuations for some of the large cap stocks out there. They're very, very expensive. Great companies, but just way overpriced. At the same time, there is a bunch of smaller companies, mid-sized companies, or even larger companies which have corrected a lot, where fundamentals seem to be turning. So if you look at the June quarter results and look into what's driven the earnings growth, obviously there was a base effect. June quarter last year was the one that took brunt of the GST-led inventory correction and so on. But even otherwise, I would say that fundamentals have started to pick up in some of the smaller companies. So this is, I think, a trend change where you have macros worsening, but you have micros improving, which creates a huge opportunity for bottom-up stock picking. So, obviously, the macro is worrying. The frontline indices look expensive. Several large cap stocks look expensive. So there is reason to argue that the market may not have significant upside from here. But at the same time, I think there are a lot of individual stocks which are very reasonably priced, where earnings are turning, where fundamentals are improving, and hopefully they should continue to deliver very solid earnings over the next 2 to 3 years. So, through this choppiness, yes, there will be, some ups and downs even in these companies. But from a medium-term perspective, I mean, I find stocks looking far more attractive now than I did, say, about 7 or 8 months ago.
Okay. Good morning, Ashwini. Just a word now. I wanted to point out the rupee stabilizing a little bit on reports from, I think, Cogensis that 2 private banks were selling dollars. So, usually you hear about the Reserve Bank selling through public sector banks. So, if private banks sold, maybe it was exporters, but 71.96. The big selling of dollars also has not resulted in too much of a move away from 72. The dollar is still almost as expensive as it was yesterday night. Ashwini, I wanted Ashmore's view on this emerging market sell-off itself. Is there a sense that we are at an end, or is there a sense that we have just begun? This is a protracted sell-off.
So, very interesting question, Lata. Earlier this week, my colleague Jan Den, who's appeared on your show several points in time, he was saying that if you look at the US dollar rally, let's forget about the emerging market currency correction, let's look at the US dollar rally. His view is that the kind of rally that we have seen in the US dollar is unprecedented, barring the period just in the run-up to 2001-2002. So it was in 2001 or early 2002 when the dollar was as expensive as it is today relative to all other currencies in the world. And it is the dollar strength which is a problem for emerging markets rather than the imbalances in the emerging market countries themselves. Barring, of course, let's say Brazil, Argentina, Turkey, and more Argentina, more Turkey rather than Brazil, by and large emerging markets do not have the kind of imbalances that have affected these markets in the past. Whether you talk about the Asian crisis or you talk about even the global financial crisis, I mean today the imbalances are barely there. So our sense is that you've had a one-way run in the US dollar. There should be a cooling off that should come about. And that will underpin a longer rally in the emerging markets, currencies and fixed income as well as equities. And this should start to unfold in the next couple of months. Very, very often what happens in markets is that a trade carries on for a long time. It looks ludicrous to everyone, but it keeps carrying on and then it turns. What will make it turn is very, very hard to forecast. But to us, the dollar appreciation move looks unsustainable.
Okay. I wanted your thoughts also on how to approach some of these spaces like pharmaceuticals, because this is one space that Ashmore has liked in the past. Now, of course, the space has done well over the last few months, but now we are seeing some signs of US FDA clampdown again, whether it's on names like Sun Pharma, Cadila Health, etc. Would that be a bit of a concern for you, or is this a sector that has turned for the better?
So 2 points here. I think surprise inspections, the kind that we are seeing now, is something which is par for the course for the pharmaceutical industry in the United States. And given how large India is as a supplier to the United States, that is par for the course in India as well. If you look through the observations that have come through, I personally didn't think that they were very damaging. And I think most companies have now matured to a point where they are geared up to meet US FDA's expectations. Yes, of course, once in a while something will go wrong in India, just like as it does anywhere else in the world, where some company or some plant of a company comes up short relative to expectations. But having a couple of observations in a 483, I don't think is a huge issue unless there is data integrity issue, there is a suspicion on the kind of quality that that particular plant is producing. So I really don't think US FDA is as big of an event risk going ahead as it has been in the past.
Okay.
The other question, of course, is that the stocks have rallied, and that to me is something that you need to look at individual stocks and see where valuations still provide comfort versus where stocks are now looking reasonably priced.
Okay. What about autos, Ashwini? Because a couple of stocks have done well, like M&M and Escorts, but in general, this sector has lagged. Maruti, for example, is way off its highs. We've seen the problems with Bajaj Auto and Hero MotoCorp in between. TVS Motor, though beginning to make a bit of a bounce again. Your thoughts on this space?
So there are a couple of moving parts here. First is, in the case of Maruti, there is the fact that the stock had become quite expensive in earlier part of this year. trading at peak multiples with peak margins. So that's obviously, in our view, always a situation that one needs to be a little cautious about. More importantly, if you look at the car sales data, that's starting to not be very encouraging either. What I'm hearing is that the huge impact of increase in government wages over the last 12 months fed through to car purchases, and that kind of has now started to taper off. I don't know if it's true or not necessarily, because the August numbers could also have been impacted by the Kerala flood. So let's see if this trend persists over the next couple of months. Coming to two-wheelers, it's a very specific situation where one player has decided to aggressively compete at the lower end of the motorcycle market, which has caused some concerns for the marketplace. But I think overall, two-wheeler sales, at least in aggregate for the industry, continue to be robust. CVs in particular have continued to do very well. So, there are different markets which are giving you different signals. And I think one has to be very stock selective. As a sector, the auto stocks are telling you exactly what the broad market is telling you, that don't look at a sector, look at individual stocks, look at individual stories. I mean, Mahindra & Mahindra is a great example. Just for due disclosure, we may or may not have a position in the stock, but just in order to answer your query with that name, they've had a couple of really interesting product introductions of late, and that's helping that stock. So it pays to be very stock specific in a market like this.
All right, Ashwini, we'll leave it at that. But since you spoke about the two-wheeler space, we're going to take that argument forward.